Welcome to Market Blaster, where we blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets editor John Dobis. Well, on Friday, it was JP Morgan Chase CEO Jamie Dimon and his bank which brought the luster back to stocks and to the banking stocks in particular. Then on Monday, it was the turn of Vikram Pandit and his bank, Citigroup. Citigroup, it pleased investors, producing a negative 12% change in EPS on a 7% drop in sales. But hey, thumbs up. That was better than what Wall Street had expected from the bank. Shares rose about 2.5%. Look at the chart here for Citigroup. A possible double bottom forming with June 1st. And now a couple days ago, after it hit bottom, stock climbing above the 10 in the 50-day moving average. You've got good fundamental and technical strength in Citigroup, leading a rebound in the entire financial sector. The XLF right here with a chart that looks a little bit better than that of Citigroup, mind you, bottomed out also June 1st, but has not gone to retest the lows like Citigroup did. Will it have to before it goes higher? Who knows exactly. But right now, the technical strength is in the sector, the XLF. You still have a lot of earnings to come from the financial stocks. Tomorrow, on Tuesday, we've got Goldman Sachs. On Wednesday, we've got Bank of America. Thursday, we've got our old buddies Morgan Stanley to fess up. So far, Wells Fargo, JP Morgan, and now Citigroup have done fairly well versus expectations that have been set out for them. We'll see if Goldman and Lloyd and the boys there can manage it tomorrow. Ben Bernanke will be speaking before Congress for 2 days on Tuesday and Wednesday in his semi-annual Federal Reserve Monetary Policy address to Congress. He's on the Hill. He'll be talking. It's the Humphrey-Hawkins testimony. Let me digress for just a moment here, folks, if you don't mind. I, a fairly educated fellow, thought that Hawkins part of this equation was Paula Hawkins, the senator from Florida. But it's not. It's a guy named Gus Hawkins. He was a Democratic congressman from California. And, of course, Hubert Humphrey, the great senator from Minnesota. Now that you have that bit of trivia for your friends at a cocktail party, you can whip out and look pretty smart. I'll tell you about what Ben's going to be talking about. He'll no doubt address this retail sales decline last month of 0.5%. Economists were looking for a 0.2% rise. This is the third back-to-back decline in retail sales in the U.S. The first time we had that in the last decade was in the beginning of the 2008 financial crisis. So not a great precedent right there. Gold has been perking up. See, it's kind of basing above the 10-day, above the 50-day average. Does gold possibly sense that Ben Bernanke and the FOMC will unleash another round of quantitative easing? Quite possibly it does. You can see that the metal has not retreated the way you might expect it to after risk is off. 10-year Treasury note, that sucker is as low as it has been just about forever. June 1st was its low. This looks a lot like the chart of Citigroup. Yields are very low. So if Ben does do a QE3 or some other thing to keep rates low in the long end of the curve, geez, how low could that be? 1.46% now for the 10-year yield. That's pretty nuts. You want to maybe load up on some dividend yielding stocks. Intel, though, has a little bit of volatility ahead of it. It reports earnings on Tuesday. You'll recall the Blue Man Group ads for Intel. That was when PCs were the dominant way that people got on the internet and communicated with one another. But now it's pads and tablets and smartphones and things like that. Intel still rules the roost in PCs, but PCs don't rule the roost as far as information technology consumption. So, having said that, look at the chart. Intel has slipped below its 200-day moving average. Not a great technical sign for the stock. And you don't feel too good about going into earnings with Intel. IBM, Big Blue coming out on Wednesday. Also below the 200-day moving average. Big cap tech not doing so great here. Oh, here's one that might be. Windows 8 coming out from Microsoft. They got the Surface tablet here introduced by Steve Ballmer. Hopefully it won't be another Zune. And then you've got Microsoft. The chart is looking a lot better than Intel or IBM, staying above the 200-day moving average, still yielding you about 2.8%. Not bad there for Microsoft. And the granddaddy of all tech stocks, of all stocks in the country for that matter, Apple. Next Tuesday, we get a look at Apple's earnings and maybe a look ahead at what the company is going to be doing. Look at that technical strength, sitting above the 10-day average, above the 50, above the 200. Nice little base forming here since mid-April in shares of Apple, making a run back for its old high at $644. So earnings season with the financials and the techs still going strong.